Let's start the tax definition. Okay. So tax definition hierarchy. Now tax setups, this hierarchy, what is known as the regime to rate flow. This is the backbone of your tax definition. All your taxes will be calculated in the system, the basic calculation after you define this flow in the system. Now what this flow is, regime to rate, this is mainly comprised of these four things. It's comprised of your tax, your regimes. I'll cover in detail what these four are. You have seen in the first slide we have covered the determination system. First looks at regime, then it looks at tax, then it looks at status, and then finally it looks at rate. So this is known as regime to rate flow. Now this terminology came into existence with Artwell, where it was a complete flow because everything was on the one page. But with cloud, it's, you can see once you open your tax configuration, like Ashish was saying, you can see it there. But otherwise, they are all independent things. They are all four different independent things which are required to perform before the taxes will be calculated. If you miss any of these things, your taxes won't be calculated. So that's why it's called as flow. And flow means your regime, tax, status, and rate. So rate falls under a status, each status falls under a tax, and each tax falls under a regime. So these are all cascading things you will see. That's why it is known as flow. But also by jurisdiction and recovery rates. So these are also two setups which are not part of the flow but which are required for your tax definition. Parent-child relationships form a hierarchy which is easy to visualize, navigate, and maintain. So these are all your parent-child relationships. Now tax is the child for the parent. Regime is the parent. So all these fall under a parent-child relationship. And these setups can be normally shared across all applications. Now you have created a regime for US regime. You have total 20 legal entities in US, or you have 10 operating units in US. All these 20 legal entities and 10 OUs can share the same regime. Because the nature of taxes is US is sales tax, which will be applicable for all these 20 and 10. Regime decides the nature of the taxes which can be different for each country. And with this, since all of them are in US, they can share the same US regime. So it is shared across all applicable applications, legal entities, and OUs. Application means the same regime will be used by your payables modules as well as your receivables module, the same taxes. You need not define separate tax for your AP and AR things. It will be same. And this feature is completely new. Now new here means new in Artwell. Before Artwell, this does not exist. Any doubts on the definition hierarchy? Okay, so let's take it with an example of UK VAT, how this hierarchy is seen. Now UK VAT, we have seen it is a VAT tax, VAT nature of taxes. Now what will be all these things in the UK VAT? So this is the example for your UK setups. You have a UK VAT where you have 4 types of tax rates. You have a standard rate which is 100% recoverable and which is 17.5% tax. You have a reduced tax rate also which is 5%. Again this 5% is 100% recoverable, and you have your zero rated and exempt taxes which is 0%. So this is the basic structure of a UK thing. Now what these terminologies means in case of this UK VAT. We'll see that.
So recoverable here means just we can take the credit, right?
Yes, whatever. We can take the ITC, yes, input tax credit.
Okay.
Yeah. So all these taxes are we have seen these are destination and origin based. Now another nature of taxes is they can be recoverable and they can be non-recoverable. VAT and GST are recoverable in tax nature, whereas sales tax is non-recoverable in nature. So in US, all these sales taxes non-recoverable. Whatever is paid, it's paid. Whereas all your VAT in your EU countries, GCC countries, and your GST in Canada as well as India, they are all recoverable. You can claim ITC on that. So all
It's
these
kind
things
of
you should.
no, it's okay. You can go on.
Yeah, so I was just saying that all these things you should know before going ahead with the configuration of this module. So these are very basic questions that you should know before configuring. Yeah, you were saying something. Please go ahead.
No, that's okay. I don't have any question.
Okay. Okay, perfect. So let's see what this UK structure falls in this terminology. Tax regime. This is the first thing in your regime to rates flow. Now what this tax regime means? Regime in the terminology of Oracle means nothing but the set of rules and regulations which determine how one or more taxes will be administered by a tax authority. Now in UK, HMRC is the tax authority that decides how VAT will be administered. For example, it also administers other custom duties and other duties which are applicable by HMRC, but basically this is the authority and this is the nature of taxes in UK. In US, it will be a separate authority and it will be a separate nature of taxes. Similarly, if you come to India, it will be separate. India doesn't follow VAT, it follows GST. If you go to Australia, Australia follows VAT. So each country, even if Australia follows VAT and in UK follow VAT, their VAT will be different in multiple things. The nature of VAT might be different in both the places. So for this logic, we always create as a best practice one regime per country, because nature of tax will be different for each and every country. If in a country there are two taxes which are of different natures altogether, in that case you can define two regimes for one country, but as a best practice we always define one regime for one country, and regime is the first level of the definition of taxes. For UK, since it is VAT, I will define one regime known as UK VAT. I can give any name, but yeah, just for a standard convention I'm using UK VAT. So this will be my first step. Any doubt on what regime means?
I think we are clear with this.
Okay. Next comes the tax. Now under this regime, there can be multiple taxes which fall. For UK, we have only one tax, that is UK VAT. But if you take Canada example, and I have defined a Canada regime, that is CA GST, Canada GST, there will be three taxes under this CA GST. I have GST, I have PST, I have HST. If I have India regime, I will say INGST. Under INGST, I will have CGST, I will have SGST. So what are all the taxes which fall under a regime I will define?
Priya, I have a question.
Yeah.
Sorry to interrupt you.
No problem.
Like if we have like in Canada, like if for any service or any goods that we are selling, we'll be charging all the three only, or only one GST, like GST or PST or PGST or
So
whatever?
in Canada, we have two, like GST and PST, both will be
Right.
charging, because or HST, because HST is a combination of GST and PST. So it depends on the state. For example, you are selling your goods in Ontario. So Ontario states follow HST. It doesn't follow the GST and PST structure. So if you are selling good in Ontario, one tax will be charged, which is HST 13%. But if you are sending goods to say Alberta, they have two taxes. They have 5% central GST and PST 7%. So there will be two taxes for Alberta.
Right. So similarly in India also we'll be charging both the things,
Yes,
CGST and
both.
SGST.
Yes, correct.
Yeah. Hopefully in future like they will bring it to harmonized thing or
Yeah,
something.
let's see. Yeah, but yeah, they started with these two, just like
Yeah,
Canada.
there
Yeah.
will, because there will be a fight between state and center for the revenue.
Yeah, obviously, yeah. So unless all these fights are resolved, everything is stabilized. In Canada also, there are only some provinces which has harmonized. It's like not every state agreed for the harmonized, but yeah, they go ahead with the states which agreed and they make it harmonized there.
Yeah,
But with
same
the
thing what
states that
happened
did
with
not
VAT in
agree,
India. Like for some
same,
states
correct.
they took the VAT, but
Yep,
some other
yep.
states they didn't.
Yeah, same thing, yes. Okay, so these are all the taxes that we define under regime. So if your business is now say UK, US and Canada, all three countries, you will define three regime. Under UK define, you will define one tax. Under Canada regime, you will define T taxes, that is GST, HST and PSG. And for US regime, again you will define three taxes, that is your state, county and city. So this UK VAT, second UK VAT, I have defined as a tax. So tax, it's a definition wise, it's a distinct charge which is imposed through a fiscal or tax authority. And every tax in fusion tax is defined under a tax regime. That is, it is, because it's a part of law, it falls under a regime. Any doubts on the tax? What tax means in each country?
I
Okay.
think yeah, that's fine.
Next comes the status. Jurisdiction, since it is not part of flow, I will cover it separately. Next part in my flow is the status. I have defined a regime UK VAT. I have defined a tax UK VAT. Now, for this UK VAT, what can be the different natures of this UK VAT? So I have four different types of UK VAT. I have a standard UK VAT. I have a reduced UK VAT, which can be applied to say a set of customers or set of items. And I have zero rated UK VAT and I have exempt UK VAT. So I will define these four statuses. Now these can vary each country to country, each tax to tax, under each tax, because this status falls under a tax. So you can see this arrow, tax to status. So if you have three taxes, state, county and city, for state you will define statuses as standard, reduced, zero rate. For county you will define again three status, standard, reduced, zero rate, exempt, whatever is applicable. And for city also you will define these statuses.
So it is mandatory to define all the three for like each.
No, it depends on your business requirement. If you have this requirement, see, everything here is optional. There is nothing mandatory. It all depends on your business requirements.
Right.
If your business is required to charge 17% on some goods and 5% on some goods and 0% on some goods, then yes, it is mandatory to enter. So it depends on your business. How big is the size of the client and what legislation are applicable to that client. So all these things you decide at the time of your requirement gathering while defining the scope of the module.
Priya, any
So
change in functionality? Any change in functionality in comparison to EBS here?
no, all these are same. No, till now there is no change. It's all same.
The one difference is that we have one page in Artwork, whereas we have multiple pages to define this in Fusion Cloud, right?
Yeah, in Artwell it was like module specific. So yeah, there was only one page, but in Fusion it's all separate because we have setup and maintenance responsibility. The structure of Fusion is different, that's why it is different. But otherwise in each page you will find all the columns are same as Artwell. You won't find any differences. I'll tell you wherever we have differences, I'll tell you.
Okay.
But yeah, this structure is same. This regime to rate flow is same. There is no change in that. Okay, any doubts on these 3 points, regime, tax and status?
No, it is clear.
Okay, perfect. Now next thing in the flow comes is rate. So my last step of the flow, regime to rate, that is regime, tax, status and after that rate. So rate is nothing, for each status they have defined, there will be a rate which will be prescribed by government that you define. So rate falls under a status. This is the arrow. So for 17, this 17%, 5%, 0% exempt are the rates. Exempt is, it depends. If the government says that you have to show what are the exempt goods in your reports, then you have to create exempt also as a line. But if otherwise, exempt means the no tax will be calculated. So it depends again on your reporting requirements. In UK, it is required to show exempt also as the separate line with 0% weight and treat it separately as exempt goods. But if it is no reporting requirements, you can simply assume that on the transactions where there is no tax applicable, they are exempt transactions. So all these rates are to be defined in system. So rates are whatever is, and all these rates are date effective. Every setup I'll say is date effective in this nature. Okay. Then we have something which are not part of this flow. That is my jurisdiction and something called as recovery rates. So if your taxes are recoverable in nature, that is you can claim the ITC back from the government, you define the recovery rates. Now recovery rate is how much I can recover. Is it 100%? The entire 17% I'm paying to government I can recover back? Or it is only that some percentage I can recover? Now for UK countries, all the EU countries, it's all 100% recovery. But if you come to Canada structure, again since they have this state and government central thing, some of the states, they say that it is recoverable, say 60% or 70% only. Central, it is 100% recoverable. So it's again separate for each state, the recovery also in Canada. But in countries like UK and other EU countries and GCC countries, it's all 100% recoverable. So it's again depends on the country you are implementing. First thing is if the country is recoverable or not, the taxes fall for that country. Second thing is if it is recoverable, what is the recovery percentages? Or it can be zero recovery also as per your thing. So the number of recovery rates you will define. If it is all 100%, you will only define one recovery rate. But if it is 0% recovery, 100% recovery, 50% recovery, then you will define all these in the system. And jurisdiction I'll cover. It's not part of this flow, so it's not here. So jurisdiction is nothing but the geographies. Now for UK, since it is a country-based tax, your jurisdiction will be United Kingdom. But the thing change in case of US. In US, your jurisdictions are California, Los Angeles, Arcadia, or all 20,000 plus jurisdictions. With Vertex file, all these jurisdictions are also created because again, they are be created from the TCA responsibility. So whatever geography you have entered in TCA, you have to create a jurisdiction if the tax is applicable on that geography in the tax module. Similarly for Canada, you will define Ontario, Alberta as the jurisdictions. So before defining these jurisdictions, the value should exist in your TCA. Let's start with setting up of tax regime. Let me just open the instance. So we'll go to our regular setup and maintenance. Let me just go to implementation projects and show you. I guess this is the one Ashish is using.
Yeah.
So I just want to show you on the tax part. So we have this tax configuration. So here you can see all of them. You have first thing is manage tax regimes. Then if you are uploading your jurisdictions and rates, you can run this program and upload them. Then you have manage taxes, tax rates, your exceptions, party tax profile. So everything related to tax you will find under here. And then you have your advanced tax configuration, where you have your jurisdiction, statuses, roles, geographies, formulas, and other things. So first we are going to set up our regime. So I'll click on Manage Tax Regime. And I will click on plus sign. So let's enter the code as XYZ UK VAT, because I guess the ledger and the name starts with XYZ. So I'm just using the same. Your country will be your United Kingdom. Your regime level. Now regime you can set up for each country, or you can set it up for a group of countries. So group of countries, if you set, it will be your parent regime. No, it's not. No, it's just United Kingdom. It will accept. So you have country and you have a tax zone. So that is your group of countries. For example, for European Union, if for the reporting purpose of entire EU, you want to create a group of all EU countries and set it up on top of regime for the reporting purpose, you can do so also. Otherwise, for the calculation purpose, we have to have a one tax regime for the country level regime. So I will enter the regime start date as 1st Jan 1952. In the second portion, we have some controls and defaults. Now these controls and defaults, you can change at any of the levels. For example, you have set up it for a regime, but you can change it at your tax level. It will automatically cascade from your regime to your taxes. And then you can further change it at your tax rate level or the status level, wherever these fields are there. So what are these defaults? First is our currency. First is tax, which will be the default currency. Minimum accountable unit. Tax should be applicable on minimum what amount. So it's the default value. You can change it as you want. Tax precision. Now this precision will automatically come from your currency setups. If for GBP currency in your ledger you have set up the precision to 2, it will automatically come for tax also. But of course you can change the precision for your tax. And here you have the inclusion method. This is the question which Ashish yesterday asked. Where do we set up our taxes for our inclusive or non-inclusive? So in this checkbox, you will select whether it's a non-inclusive tax, or it's a standard inclusive tax, or it's a special inclusive. Special inclusive means you have some formulas on top of your inclusion of taxes. So these are the basic ones which we use, standard inclusive or the standard non-inclusive, unless you have some special conditions defined for the inclusions. So I will say for UK we have non-inclusive taxes. Conversion rate type, you need to select whichever rate you want to use for the conversion. Rounding rule, which rule you want the tax rounding to be applicable for. Allow tax rounding override. Do you wanna give users the access to override the rounding which is done by system in your AP or AR transactions? You will enable this checkbox. Your reporting and collecting tax authorities. These are the authorities that we defined yesterday. So here is the place where will we attach them in the system. So you remember we defined HM, revenue and custom yesterday. So it's automatically populating here. Use legal registration number. For the purpose of tax, do you want to use the legal registration number or you want to create a separate tax registration number? If you click on this checkbox, while creating of your tax profile, system will automatically give you this legal number. So it's again up to your business requirement. Now you have some general controls. Allow override and entry of inclusive tax lines. Like I explained yesterday that if you have some requirement to change the tax from exclusive to inclusive on the go, if you have enabled this checkbox while doing your setups, then system will give you privilege to change it on the go. It will be enabled for you. So this is the control which controls that inclusive checkbox. Use text reporting configuration. Now for some EU countries, you have a specific configuration that you have to perform for the purpose of your reporting, like creation of tax reporting codes, reporting types. So do you want to set up the reporting configuration for this particular tax regime? If you want, if it's a regime which falls under EU or any of the countries where you have these requirements, you will enable this. Registration number controls and defaults. Do you have a specific validation type that you want to use for your registration numbers? Like for Netherlands, for example, the validation is the number should start with the country code that is NL, which is followed by 9 digits or something. So if you want to follow some validation for your this thing, for example, for UK also there will be some validation for GB. I will say United Kingdom. So these are the validations on your tax registration numbers. So for GB, if you select the validation, system will not allow you to enter any wrong number in the setups. So this validation is for each and every country wherever the government authorize any validation of tax numbers. It's not selecting. ORAGB. Validation level. Do you want to just give warning or do you want to give error to the user while entering the validation? I'll say okay, just give a warning. Duplicate validation level. So do you want it to select to give an error or a warning if user is entering a duplicate registration number for any of the customers or any of the suppliers or any of the third parties? I'll say no, do not enter any validation for the duplication. Another is compounding level controls. Now, do you have an idea what compounding means? Any of you?
No.
Okay.
No.
So compounding means tax on tax. Like in India, we have, for example, excise is calculated and then we have education cess or any other taxes which are applicable on that particular tax. So for that requirement, we have compounding level controls. So do you want to allow compounding from regime to regime basis? If it is yes, you will click here. If it is tax compounding only, tax on tax, you can enable it at your tax level also. So it's up to you. You can enable at regime level or you can enable at tax level. For example, if tax on tax, the two taxes are of separate nature altogether and you are defining a separate regime for both the taxes, you will define it at the regime level and otherwise you can define at the tax level. So I will say the compounding precedence. If you are assigning it at the regime level, this regime will be the first tax or the second tax. So you will define the precedence here. As of now, the compounding requirements exist, I guess, only in Italy for some of their taxes, but in most of the countries for indirect taxes, there is no compounding requirement. It used to be there for Canada before 2010, but after 2010, they also removed this compounding requirements. But yes, Oracle provides the functionality wherever you have any requirements for compounding of taxes.
In GST, we do not have any compounding, right?
Not that I'm aware of.
Okay. Okay.
Yep. But it might be the case because our India system is very complex.
Yeah, recently they have
Yeah,
changed.
right. So they're like keep on changing with every notification and all. Daily something new is coming. So we never know.
Right.
Yeah. But yes, we have the functionality. If anything is there, we can set it up in the system. Any doubts on any of these checkboxes as of now?
No, I think.
Okay. Next part in our regime setups is our configuration owner and your service subscriptions. Now this regime is applicable to which parties, which OUs and which legal entities. Here you will select that. So I will say XYZ General Insurance. Now you will have your BU as well as your legal entity. So which one to select here? In most of the cases where you have only one BU and only one LE, some people assign both of them, which doesn't make much difference. But the requirement is, if you are selecting your BU anyways, then there is no requirement to select your legal entity. But if you are selecting your legal entity, then you have to enable your BU for that particular legal entity. I'll show you how you enable this. But if you have like a simple structure for your BUs and LEs, then you can assign both of them also. The main problem comes when you have, say, 20 legal entities in UK, out of which only 10 are liable to taxes. Another 10 are, say, your non-profit organizations or some other type of companies which you have opened which are not liable to taxes. So in that case, you do not attach your BU, and you attach if you are if you have only one BU kind of structure. Then in that case, you will only attach that 10 legal entities and not the complete BU. So it depends on your structure of the organization, how you have structured. Configuration for taxes and rules. Do you want to make it common configuration, which you can, like you can keep on adding the parties and the same configuration will be used? Or you want to use common configuration, but if you have some party specific setups, you can define that. Only party specific configuration. That means your configuration will only be for that particular BU or particular legal entity and not for the entire one. Parent first party organization with party overrides. So this is the last one which was not there in the EBS. That's a new LOV. I mean the first three values are already there. The last value is newly introduced in cloud. So what this value says, parent first party organization. So if you have a parent-child and child relationships between your first parties, it will take the setups for your parent first party and it means with your party overrides. You can override it to another party. So for most of our configurations, we select the common one because we are going to use the same configuration for our another LAs. In future, if I open another legal entity in UK, instead of performing all these setups, I will simply select here the another name of legal entity. I'll update this and I'll add the another LE, and the same setups will be applicable for that LE also. So I always put my setups open to the another requirements unless there is some regulatory requirement by government that your tax setup should be at your party level, which I have never seen the case. So that's why as a best practice I always keep it common, or you can keep it common with party overrides. But these are not the values which you should use unless it is government regulatory or some requirement is there to have the setups only for that particular party. So I'll say 1st Jan 1952, 1952, and I will save this. Here I have another column for service subscription. Now in service subscription, I add the name of your third-party service provider. So if you are taking the services from your third parties such as your Vertex or your Taxware, then you add your service subscriptions in this checkbox. So if you go to service subscriptions, you will again find the same thing. What is the party name and what is the service provider? So let us see if we get anything here. In party name, it will give you the list of your legal entities again. For example, I have selected this BU, and this will give you your service providers. There is nothing in the list as of now because we have not taken services of any of the providers. We have not configured them in the system. So once you configure, you can attach your service providers here. As of now, I will just delete this. because I do not have any service provider. And I will go back to my configuration options and save this. Any doubts on this regime page before I move ahead?
No, Priya, I think I have a doubt with service provider. I'm not sure what does that mean.
Yeah, so service provider is if you are taking the services of say Vertex and Taxware,
Okay, sorry. I
yeah,
missed
then
it.
this is your third party. You attach it here.
Okay.
Okay. Any doubts? Any other doubts on the regime?
No.
No, I
Okay,
think.
so let me click on save and close. So with this, your tax regime is created in the system for your UK VAT. Now after my regime, my second thing was my creation of taxes. So in the PPT also, I have given the screenshots for your regime. It says your regime level is defined for a country, and if you are taking a group regime, that is at your tax zone level, you can create it for your, for example, EU, which comprised of the lower country VAT regimes. So these are the controls and defaults. Now this is the thing that I was talking about, your content and services subscription. So what this page handles, you define your configuration options to allow the users to define for your first party LEs or their BUs. Do they want to centralize or decentralize the maintenance of their tax contents? Do they want to set it up at which level of the parties? And whether they are subscribed to any third parties, that is your Vertex or your Taxware or any other vendors. So we have seen our configuration ownerships. We defined it at the regime level, any level. The options were common with party override, party specific, and so this was the earlier version, I guess. With R12 they changed the option to the another one. So here you can see earlier you used to have it separately for product exception, but now they have made it just here. This was the change which is done in release 12 of the cloud. Before release 11, I guess this screenshot is of release 11. That's why you can see it here. Now, when are you going to use this checkbox? I'll come to this point later because I have not explained this to you yet. So I'll come to this when we define the tax profiles. With this, I'll just conclude this part 2 and I'll open part 3. Now, part 3 starts with the definition of taxes. So let us define it in the system. We started entering value for service subscription. Let me just delete it. Okay. Now I can save it. Perfect. So my regime is created. I will click on done here. And I will start creating my taxes now. So I'll come to manage taxes. To create the taxes, I need to select under which regime I'm gonna create my taxes. So select and add. My regime started with XYZ, UK VAT. So I'm gonna create my tax under this regime. Let me just go to another navigation. I'm not sure why it's not coming here. So anyways, you know where we have all the tasks for your text configuration. So I'm free to use this window now. So I'll go to manage taxes. I will select my tax regime. Sorry, no tax exists for that. I was searching the taxes. So I'm gonna create a new tax. My regime name, because tax is under this regime, So that's why it will ask you to select your regime. This is the configuration honor. Since we have selected the common configuration, we will select our honor as global. So whatever is set up under global honor, you can assign it to any n number of parties later. So here in this LOV, you will see your global honor as well as you will see your, for example, your parties also. Let me search with XYZ. Oh, sorry, we have defined it at the common level, so you won't see the XYZ. But if you define your configuration at your party specific level, then you can see your all the parties here for which party you want to define your taxes. But since we are doing it at the common level, it's always good to use the global. I will enter the tax name also as XYZ UK VAT.
Priya, if we would have to tax regime, then we have to define separately, right? Tax.
Yeah, if your regime is at your, you mean to say party level, right?
No, if for UK, like I have this one tax regime, in case if I have to, then I have to define tax for
Both the
separately for.
regimes. Yes, both the regimes, yep. But I don't see a requirement to create two regimes unless the tax nature is completely different, unless it is no VAT taxes. If all are VAT taxes, I'll define all my VAT taxes under one regime.
Okay.
The best practice is to always have only one regime for one country, unless you have some compounding requirements or some other type of requirements which are not met with creating one regime.
Okay.
Like in India, Priya, we had service tax, VAT, excise. So for all these, we used to create one regime or separate regimes?
What we used to create is in India, we used to have India localization. We
Okay.
never used to use the standard module because it doesn't fit with our tax requirement before GST. So we
Okay.
had our India localization thing.
Okay, okay.
Yep. Because the standard module doesn't support everything what we used to do for India.
Can I use the same regime for withholding taxes as well, or it is just for indirect taxes?
Yeah, so I will come to that later. Now what happened is in till EBS R12, our withholding setups was part of our payables module only. It was never part of the EB tax module, even with R12. Now with cloud, that this is the main feature of the cloud, that now withholding tax is also part of EBS, that is your fusion tax. So that's why, let me just cancel this. You can see here in this window that for all your taxes, you have your transaction tax and your withholding tax. Now the same way I'm defining the regime to rate flow for my transaction taxes, you can use it for your withholding tax also. The Oracle has retained the old functionality, that is your payables withholding tax, but yes, it has given the new functionality of moving the withholding tax to your cloud tax. So this is the same process for now creating withholding tax also as well as transaction tax also. The moment you come here, it will all come to your withholding taxes, create withholding taxes. So if your organization requirement is pretty simple for the withholding taxes, this is like satisfied by your R12 feature, which used to there in the payables, you can use that. But if you have any some conditional based withholding tax or any such rules or any such more conditions country wise, then you can use this module for the setup of withholding taxes also. So that's a new feature in cloud itself, which was not there in R12, and that's a big feature.
Okay.
Yep. So I'll just enter the values again. XYZ, global, name of tax. So this is the tax code, tax name. You can enter any naming convention you can use. This is your tax type. Now this is the nature of taxes. So you can select it's a VAT. If you are creating separate taxes for your goods, inter-EU services, you can select these types here. That's a lookup. You can add as many values as you want in the lookup, but these are the standard values. Now, this checkbox is not mandatory if you see, but this is used for some localization. For example, for China golden tax, this setup is mandatory. For the China golden tax to set up, all your taxes should be of the VAT type for China. And for this is also mandatory for some of the EU countries, like as for Belgium localization also they are using this checkbox. So this is required for only localization countries where they have specific requirements. For other countries where you are not using any localization, you can simply leave it. Or if you just want to capture it for your own purpose, you can capture that. That's the start date of taxes. Now on the right corner, you can see two check boxes which are disabled. Enable tax for simulation, enable tax for transaction. Unless you enable these check boxes, your taxes are not available for any transactions. So you complete all your taxes. Unless this is enabled, the taxes won't start getting calculating. Now what used to have till 11i, we used to have only one, till R12, 11i it was not there. We used to have only one checkbox, that is enable tax for transaction. It was named as make transaction tax available for transactions in R12. So what used to happen is during your cutover and all, you used to set up all the taxes and you used to enable it on the day of your go live, because once you enable, you will start getting taxes calculated on your invoices. Now when you can enable it, why they are disabled? You can enable it only after completion of your regime to rate flow with the default rules. So unless you have your complete flow defined, these checkboxes will be grayed out. So you complete your flow, you come back to your taxes and you enable. Now this is the checkbox which is given new with the cloud. So what this checkbox does is, you first enable the tax only for simulation. Simulation is a new feature. The feature came into existence in R12, but that was not fully functional at that time. But with cloud, this is again fully functional feature. So you simulate your AP and AR transaction and see if all the taxes are coming fine before enabling it for your actual transactions, so that you can make any changes at this level. You enabled it for your simulation, you saw that okay, my taxes are not working as expected. You can make changes, and then if everything is working fine to your requirement, then only you enable it for your actual transactions. So once we complete our setup, we'll come back and see how we enable this. Now coming to tax information, my geography type. Now this tax is applicable at what geography level? Let me just open the notepad also in the meantime, that we set it up yesterday. So here we saw that for UK we have a country level tax for in our EU countries, whereas for US we have state, county and city level taxes. For Canada we have province level tax. So this is nothing but your geography types. It's a country type, or it's a state type, it's a county type or city type. What type of geography is this tax? For UK it is country level tax. So you can see only state, county, city, province, postal code, all these types are here. For UK VAT, I will select the country. Override geography type. So this override is if you have set up any rules that you want to override this country to say economic reasons for all my EU countries, you can select this here. But this checkbox is mostly used when you have some third parties involved which override your current type, or you can use it in your tax rules also. But otherwise that is not a mandatory setup. Your geography type is mandatory. Now you see all these tax currency, they cascaded from your tax regime setup. There you set up your rate type as corporate, your rounding rule nearest. There only you selected your reporting and collecting tax authority. So all these setups came from your previous regime setups. Compounding precedence. If you are setting up the taxes for the compounding, there is only one regime, but taxes you are defining two taxes for the compounding. You can select the first tax as precedence 1 and second tax as precedence 2 or whatever you want. That which order the taxes will be considered during compounding process. Set as offset tax. I will come to what offset taxes means and how do we set up offset taxes during our last session, that is on Sunday. I'll cover that. Set tax for tax reporting purpose only. I do not want to use this tax for the calculation purpose, but I just want to set it up for reporting to the authorities. Then you can enable this checkbox. Below that, any doubts on these two sections, create tax and tax information?
Yeah.
Yeah.
Tax for reporting purpose only. What would be the scenario? Do we have any such requirement for any country?
I don't see this requirement. I have never seen this requirement to set up the taxes only for reporting purpose, because what happens is the same taxes that we create, we have a functionality to add the reporting codes to that taxes. So what comes is, for example, you have set up a tax, for example, say XYZ VAT, but it has a separate reporting code for the government. For example, this tax is coded as 0 or 1, or the government has some specific codes. So you have some reporting codes here where you can define these codes. But I have not seen a requirement where user does not want, where the business does not want to actually calculate the taxes but only report to the government. But yeah, Oracle provides this functionality, but I have not used this in my previous implementations experience as such. But yeah, offset tax is, yeah.
Second question, this tax name. So somewhere I was reading, like for few countries, this name is governed by the government. Like specific name should be given to the tax name.
Yes,
so,
correct.
Like, can you give some examples where exactly it happens?
So this is not this tax name. This will be your tax rate name actually. They call it tax code name. So when we define our tax rates, there is some specific government requirements to use the specific names on your invoices for the tax purpose. So while defining the rates, we give these tax names as per government authorities. The second thing where we can use only this naming convention which is given is your US taxes. For US taxes, if you are going to use the third parties, that is Vertex or Taxware, any of the third party integration, then you have to use the names which are provided by that integration services. For example, Vertex provides the standard name as state, county and city. So you cannot use XYZ state, XYZ county. You have to use only state, county and city. So in these cases, there are some specific naming conventions to be followed. And in case of EU countries, and in case of Malaysia GST also, government has prescribed the list of names that you are gonna use. And these names are not these tax names, these are your rate names, which will be published on your reports. So here for this purpose you can use any tax name, but while entering the tax rates, creating rates, you are gonna supposed to use that particular government prescribed names only. Any other questions? Okay, so I'll move down to your controls and defaults. Tax point basis. Now again, this is a new thing in cloud. This checkbox was not used to be there till R12. So what are these point basis? At what point you want system to calculate the taxes? So what is the event for the calculation? So you can say while accounting, while delivery, while creating an invoice, or while paying that. So at what level you want to calculate the taxes. In R12, it was only standard. When you create an invoice, taxes will be there on that invoice. But with cloud, we have a functionality to select our tax point basis. Tax inclusion method. It again came automatically from your regime. For example, you set up your regime for the non-inclusive handling, but under regime you have two taxes, which are one is inclusive and one is non-inclusive. So you can change it here. Allow override and entry of inclusive tax line. This checkbox also came from your regime setups. If you want to disable it for a particular tax, but you have enabled it at regime level, you can enable or disable at the tax level also. Same with the rounding override. Allow override of calculated tax lines. Now, as per your tax setup, system has calculated 10% tax. Do you want to give access to the users to make it to 12% or 15% on the transaction itself? If yes, you enable this checkbox. Allow entry of manual tax lines. So you have created a regime, but while entering that transaction, do you want to give access to user to enter a new tax line manually? One which is set up by system and one they can enter manually also on the invoice. If you want to give access, you can enable this checkbox. Use legal registration number. This we have already seen in our tax regime setup. If you are going to use the legal number for your tax registration number also. Allow duplicate registration numbers. If you are setting up your registration, now registration number, I'll come to that point. For your parties, for your customers and suppliers, you can set up either at the header level or at the site level. Now if it is at the header level, you won't find a scenario where you have duplicate numbers for 2 suppliers or 2 customers. But where you have capturing the numbers at the site level, there is one customer which has say 10 sites, and out of 10, 5 sites are registered in UK. So all 5 sites will bear the same UK registration number. In that case, you will allow this checkbox for system to duplicate the registration numbers in the customers. Allow multiple jurisdiction. In jurisdiction, you want system to create as many jurisdiction as you want. Use in withholding tax calculation. Now you want to use these taxes which is set up in the withholding calculation also. So for example, on a particular invoice, there are 2 taxes. There is transaction tax also and there is withholding tax also. So this is the transaction tax you are creating. So while creating withholding, do you want to include this tax or not? If you want to include, you can enable this checkbox. Tax accounts controls. What are the accounts you're gonna use? You wanna create it. If you create, you can simply create it at the 3rd tab, or you want to use it from existing tax. For example, you have created 2 taxes. In US, you have 3 taxes that you're gonna create: state, county, and city. You say whatever tax accounts I'm gonna use at my state tax, use the same for county and city also. Or for example, in India GST, you will have CGST and SGST. So you say that whatever tax accounts you have set up at CGST level, use same for SGST also. So in that case, you can use the accounts from an existing tax and you will select the existing tax name here. But since it is the first tax I'm creating, yeah.
Yeah, here we are talking about GL account. Right?
Yeah, GL account, yes.
Okay.
Okay. The next point is your exceptions and exemptions. Yeah.
Yeah, but say for example, if it is a say recoverable tax and we are clubbing, adding 2 taxes under same account, then how will we know how much balance is for tax 1 and how much balance is for tax 2?
This is your requirement. If you want to capture the balance separately, you will always create account. It's just a feature which is given by Oracle. If you want to capture both your state, county and city taxes in one account, then you can use that. Otherwise, you'll always click create tax accounts and you'll create them separately for all 3 taxes.
Okay.
Any other doubts in controls and account controls before I move to exceptions and exemptions? Okay. So my next controls are my exceptions and exemptions control. Can anyone tell me the difference between exceptions and exemptions?
Exemptions are, I believe, like there are some customers or some products which are exempt from taxes.
Okay.
And
exceptions?
Exceptions would be some item which have lower rates or something.
No.
Not sure.
Anyone else? Wanna guess what's the difference between these two?
Exceptions. Yeah, Manish, please go ahead.
Yeah, exceptions will be linked to products, like a particular product is like having a special rate, or it is like having zero rate.
Mm-hmm.
So exception is related to product, and exemption is related to customer
Yeah, party. Yes, it's correct.
party.
So wherever you see the word exception, it's always related to your inventory products. Wherever you see the word exemption, it's related to your parties. Now it can be zero rate, it can be special rate. But yeah, the words in the layman language, it means the same thing. But here for Oracle, you will always use the term exemptions for your parties. It can be your customers, it can be your suppliers, and exceptions you will use for your items. So that's why you can see there are separate checkboxes for both of them. So do you want to create exceptions or exemptions for this tax? You will click these checkboxes as allow. Use exemptions for existing tax. Same thing, if you have created two taxes, state and county, and you can say that if state is tax exempt, make county also as tax exempt. If I'm not having a say central tax, there will not be state tax also on that particular item. So if you have any such requirement, you can use this feature and you can use the exemptions for an existing tax, or you can always create new exemption for all these taxes separately. Again, these checkboxes for the registration, validations and controls, it came from your tax regime setups. And last one in my controls and defaults is my recovery controls. Is this tax recoverable or not recoverable? So wherever we have recoverable taxes, I will enable the recovery, and wherever it is not recoverable, I will not enable it. VAT is always of recoverable nature. So since I'm setting up UK VAT, I have enabled the allow tax recovery. Allow tax recovery rate override. If you want, for example, you have set up 100% recovery. Do you want to give access to users to override it to say 50% recoverable only while entering in transactions? You can enable it. What will be your recovery type? Say it's a standard recovery type. There is something called as secondary recovery type also. What is the case is, in case of Canada, the taxes are not always 100% recoverable, or it's not always primary 100% recovery. They do have some scenarios for, say, primary it's 70% recovery, but there is some secondary recovery which will be applicable in some certain cases of, say, 10%. So this also used to be there before 2010 when the Canada taxes got changed. But now in the current scenario, I do not see where you have two types of recovery. So it's always primary recovery. Okay. Next thing is I'll go to tax rule defaults. Now this tax rule default till R12, it used to be there under your tax rule setups. And there used to be two types of rules, your default rules and expert rules. With cloud, they moved the default rules from your tax rules to taxes itself. And they have made the expert rules separately. So what are these default rules and these expert rules? If you remember our yesterday's presentation, I have put some steps on the determination of your taxes. So where we have seen that what are the things system look at first while calculating the taxes. And the first thing in that was your place of supply. So system first check your country, that which regime is to be applicable. Now to set up the country, we need to tell system which country it should look at. Shall it look at my country, my BU country, or it should look at your customer or your supplier country? Now it again depends on your taxes, whether they are origin based or they are destination based. If they are origin based taxes, it should always look for your bill from or your ship from countries. That is, in case of AR, it will be your country. In case of AP, it will be your supplier's country, where the goods are originating. So since VAT is a origin based tax, I will select my place of supply as bill from. What are the other values in this? You have bill to also. For your destination-based taxes, final discharge location, that is the end location of the product. This is again your destination-based. Point of acceptance and point of origin. I have covered all these in detail what these means. Your ship from location. Now it depends on business to business. Are they going to capture their shipping parts or their billing parts? It's their business requirement. Ship to location, your customer ship to, where you are sending goods to, or in case of AP, it's your location. Ship to, use bill to if ship to is not found. Now everyone knows that ship to is not a mandatory column for your customers. It's only bill to which is mandatory. But if our requirements are like that I want to first look at ship to, but if it is blank or if there is no location, then use the bill to location. So I have that feature also. So this is the one which we normally use for our Canada as well as our US destination based taxes. But for UK, I will make it as bill from. Any doubts on the place of supply? Okay. The next thing comes is your tax applicability. So first system finds the place of supply. Now system has seen, okay, the place of supply is bill from. In case of AR, for example, I'm entering an invoice for this tax. It will see what is the bill from. That is a business unit value. Okay, the business unit is a UK business unit. So I have entered my place of supply as bill from. System find the UK country. Now in UK country, it will look for your second rule. Whether this tax you are creating, is it by default applicable or not applicable? By default means on your most of the invoices, that is your larger chunk of invoices. Now a system in your requirement, in your organization, there can be a requirement that your organization is, for example, some NPO or some other type of organization. For them, it's say 90% of invoices are tax free. You are not liable to collect taxes. But there are only 10% invoices in which you are liable to pay the taxes to the government. In that case, you will say, okay, by default, my taxes are not applicable on me, but I will set up conditional taxes for say 10% of them. So these are, remember, these are the default rules. There will always be conditional scenarios and okay, if these are conditions ABC, which tax will be applicable. But this is by default, which is applicable on your larger chunk of invoices that you select here. So I'll say, okay, the larger chunk is applicable for me. But there will be some scenarios where the taxes are not applicable, which I'll define separately. Tax registrations. Shall it consider my registration or my customer's registrations for the purpose of calculation? By default. So I will say it shall consider the bill from party's registration only, the original party where the taxes are getting originated from. Tax calculation and taxable basis formula. Now yesterday in my O2C and P2P flows, I showed you what are the taxable basis. That is your quantity into unit price. This is your standard taxable basis, your quantity into unit price. But you have some other taxable basis also. Let's see what are they. So these are nothing but the tax formulas. I'll show you how you define some more tax formulas in the system. But these are the formulas which are predefined. Standard taxable basis discount. That is, you are considering them after your discount. That is your standard quantity into unit price. This is only quantity based formula. That is, tax is applicable only on the quantity and not on the amount. And prorated. So you can play around with that. You can define your own basis as per your requirement. For example, you have a requirement that only on the 50% of invoices, on the 50% of amount of the invoices, the tax will be calculated. So you can create a new tax formula stating that, okay, if your line amount is 200, make it 50% and apply tax on only 100 of them. So you can define whatever formula you want for your business requirement. But by default, it is your standard basis. And for calculation, again, it is your standard calculation or prorated calculation. Since it's a standard basis, I will select your standard tax calculation. So these are the 5 direct defaults which you can enter it here. After that, I have some indirect defaults. indirect defaults values will automatically come from these setups. So once you define your jurisdiction, once you define your status, recovery rate and rate, one of them has to be default. So once you define these things, these defaults values will be automatically populated from these setups. Or you can go to this window itself directly and define one default for each of these rules here itself, or you can go to the specific windows. So I leave it here and I will define default while I'm defining these types separately. In R12, all of them used to be combined. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 of them used to have in the tax rule window itself. And we can create our rules on the basis of these 9 itself.